Who wants to learn how to trade Tesla with not a lot of money? Maybe just a couple $1,000. Oh my gosh, you have to watch this video. Tesla is declaring their earnings in, when are they declaring their earnings? 2 days. And when earnings is coming up a couple days before, a couple days after, holy cow, the volatility is super high through the roof. And when you sell options, you want a lot of implied volatility, because the more implied volatility, the more money you get paid, the more cash in your pocket. So check it out. Tesla is an expensive stock. It's like $447 a share, but you can trade TSLL, which is an ETF that's kind of based on Tesla. Actually, its intention is to deliver 2 times the return of Tesla. And here's the thing, it's only $20 a share. So check it out. I'm going to show you using my screen on Thinkorswim how easy it can be. You can literally put this trade in Tuesday morning. Let's just jump right in. Okay, so I'm going to show you 2 amazing trades that you can literally use Tuesday morning. Check it out. So TSLL is $20.91 per share, as you can see right here. And I'm going to say my first strategy is this. I'm going to buy 100 shares at $20.91. And then I'm going to sell a call right afterward, right over the price at which I paid for the shares. So I'm going to sell a $21 call. And that call closed on Monday at $147. Oh my gosh. So check it out. Let's just calculate the rate of return. So I'm making $147, and then I'm going to divide that by the capital that I need to make the trade. So in this particular circumstance, I need $20.91 per share times 100 shares, because each contract represents 100 shares. So I'm going to divide 147, my premium, divided by 2091. And that gives us literally a rate of return of 7%. But listen, guys, this is a 1 week. Actually, it's not even a week option, because if I put the trade in Tuesday morning, this is going to expire on Friday, October 24th. And I'm making 7% on my money. If I did a trade like this every single week, I'm literally making 365% on my money. And at the same time, I'm going to show you like a double whammy. So I'm going to buy 100 shares, and I'm also going to sell a put. And when I sell a put, what I'm doing is I'm committing to buy 100 shares, but only if it goes below the strike price. So if I buy 100 shares at 2091, I want to sell a put that's kind of far away, because what I'm doing is I'm kind of hedging. Since Tesla is declaring their earnings in just a couple of days, it might go up a lot, or it might also go down a lot. So I want to hedge my direction. I don't want to trade in a directional nature, because I don't know if it's going to go up or down. I'm not a fortune teller, and I want to make money wherever it goes, right? So I'm going to look at the deltas over here. So the delta is kind of like a cheat sheet way to determine the statistical likelihood that the stock is going to drop below that price before the expiration date. So I'm going to look at a 1650. And the reason for that is I'm going to make $17, right? And let's calculate our rate of return. I'm going to make $17 on this trade, and I have to put up $1,650 in capital, because I'm trading a 1650 put. So I'm going to divide my premium divided by 1650. Now I'm making 1% on my money. If I did a trade like that every week, I'm literally making 53% on my money. So here's what this means, guys. I'm buying 100 shares at $20.91. I'm selling a covered call right away, a $21 covered call against those shares. If TSLL is 21 or higher when it closes on October 24th, this coming Friday, I'm going to sell my shares at $21, right? So I'm going to make a little bit of money on the shares, but most importantly, I'm going to make $147 in premium. Now, keep in mind, I keep that premium no matter what happens. So if Tesla goes down, I keep those shares, I keep the premium, and then I sell another call next week. And at the same time, if Tesla drops below 1650, I'm also going to buy 100 shares at 1650. Now I own 100 shares at $20.91 and 100 shares at 1650. Now I own 200 shares at $18.70. So it's a way to average your costs down. So here's the thing, guys, that you want to keep in mind. TSLL tracks Tesla. Let's just take a look and let's just check that. So in my screen here, I have TSLL on the left-hand side, and I have Tesla on the right-hand side. And you'll see visually, look, TSLL went up a lot, down a lot, kind of sideways, up a little bit, down a little bit, etc. And if I look at Tesla on the right, it's very, very similar. Does it track exactly? No, but it's very, very similar. So making a trade like this, you can literally capitalize on Tesla, but instead of putting up $40,000 or $80,000, if you're buying 100 shares and selling a covered call and selling a put, instead of all that capital, you're only putting up a fraction of that capital. Anyway, I hope this trade idea helps. Let me know in the comments what's your favorite ticker and I can do a video on it. If this video helped, smash the like button, subscribe to my channel. I'm putting up a video each and every single day, all things about selling puts, selling covered calls, walking through different tickers. If you want to learn more, be sure to join my live event coming up. It's totally free and the registration button is below. Thanks for watching.